Mortgage rates continue to fall. Mortgage rates are down almost a full percent over the last 4 weeks. Why you might want to reconsider rooting for mortgage rates to fall. Could mortgage rates coming down be a bad thing for the real estate market, for you individually as a real estate investor or a buyer? Stay tuned. I'm going to go into some stats. I'm going to show you some charts. I'm going to tell you why you may be rooting for interest rates to go down, but may want to root a little bit different. Stay tuned. All right, Matt Gouget, Matt the Mortgage Guy, licensed in 48 states, here to help. Go to greatmortgagebroker.com, fill out the quick form, connect me and my team. Today's video, I'm talking about mortgage interest rates. It's what everybody wants to talk about when you tell them you're a mortgage broker. And it's not the only thing to consider, but it does come into play. Today's video, I'm going to show you how much so it comes into play, how it affects mortgage applications, how it affects demand, how it affects what you're going to pay for a property that you're going to buy if you're going to buy one in 2024. So first chart I'm going to pull up here because I think it's really, really interesting is mortgage interest rates laid on top of mortgage purchase applications. I've said it here before, and if you haven't heard it, when mortgage rates go up, purchase applications go down. When mortgage rates come down, mortgage applications go up. Layman's terms, if you're looking to buy a home and interest rates are coming down, as they come down and the further they come down, more people are going to join you on the demand side and want to purchase a home. Don't believe me? Data don't lie. I'm going to pull this up, this chart right here, where this orange line, and this is a one-year chart, is mapping the 30-year fixed rate mortgage. National average, probably got a point or two of cost baked into it, but nonetheless, it gives you an idea of what that average is. Down here, you've got this blue, which is the purchase index, right? How many purchase applications are coming in? Check this out. This was only a few months ago, September of 23, where mortgage interest rates started to tick up pretty fast. Right? You can see here from mid-September to the end of October, went from low sevens to high sevens. What happened to the purchase index? Went from 147, 144, 136, 137, 129, 127, 125. So as mortgage rates went up, purchase demand goes down. Then the opposite happens. Over the last month, mostly all of November, mortgage rates have been in somewhat of a free fall. Here it says 7.22. I'm talking to you early December of 2023, and I can tell you this number is approaching 7% for a nationwide average with a little bit of cost up front. But what happens to the purchase index? 125, 129, 133, 138. 144. Interest rates down, purchase applications up. Okay, we've clarified that. I think everybody can see it's a pretty clear correlation between mortgage interest rates and how much buy-side demand there is. As everybody says, mortgage interest rates are down. Great. What could the problem be? Homes will be more affordable because the mortgage interest rates are down. The problem lies in the fact that we have very little inventory across the country. Take Sacramento, for instance. If you follow SacramentoAppraisalblog.com, my buddy Ryan Lundquist does a phenomenal job sharing stats. We're missing over 1,000 units of inventory that we would normally see. And if you look at 2019 and before, average inventory for any given day, any given week, any given month, we are well below, 40%-ish below what we should have for inventory, houses to buy. Now, very little houses to buy. If mortgage interest rates go down and people wanting to buy those houses increases, what happens is this is multiple offers. This is competing for the same small amount of houses that are listed at 500,000. And one person says, I'll pay 515. Another person says 520. And, you know, in their defense, they want the house. It's the right house. At 6.99%, they can afford to pay 540 versus 510 because it's the same payment that it might have been at 7.5 or 7.75. But that's one thing that people don't understand. So I'm saying it here and I'm saying it clear. If interest rates come down and demand goes up, you will pay more for the house. You will be in competition with more buyers, especially the ones that are all competing for the same entry-level house. In your neck of the woods, it might be something different. In Sacramento, that's around the $500,000 mark. So while you root for interest rates to go down because you think it's a fix for affordability, keep in mind, whether you buy it at 500, at a 7.5 or a 7.75% interest rate, or a 550 at a 6.99 interest rate. Either way, you're going to end up with just about the same payment. What people operated in over the last couple months, which I thought was really good for buyers, was an environment in which they could go out and they could find deals. And in my example where I said, do you want 500 at 7.75 or do you want 550 at 6.999? What some people did, and I encourage people to look for these as well, find a property that's been on for 55 days. It might have a price attached to it that isn't reasonable. You go in and offer 485 on that property. And if you buy it at 485 today and can refinance it at 5.99 in fall of 24 or spring of 25, you'll be in a lot better position than you would be if you wait for 5.999. Because I promise you, when you wait for 5.999, more people flood into the market, and that home that you could get for 485 is going to have multiple offers. It's going to sell for 550, 560,000. Now, this is just random numbers coming out of a random guy's head, but rest assured, I've helped thousands of buyers purchase hundreds of millions in real estate. I have seen a thing or two, so I probably know a thing or two. And I've seen this dynamic play out. In the fall of 22, I said, rates are high, people are scared, there's less demand, go out and find yourself a great deal. And some people did it. Others waited and said, I'd wait for interest rates to come down. March, April, May, 2023, there was a lot of demand. The spring buying market was upon us, and they would have paid more, and rates hadn't even gone down, than they would have paid had they bought 5 or 6 months ago. The same dynamic is happening in the fall of 23, and while rates are high is where you're going to get the best deal. If rates come down and we see the seasonality pick up to where more buyers are in the market come January, February, March, you're just going to pay 10 to 15% more for the home than you would have, could have, or should have had you bought in November, December. Rant over. Hopefully this helps. Let me and my team know how we can help. Go to greatmortgagebroker.com, fill out the quick form. We'll get in touch. We'll get you pre-approved. We'll show you your specific numbers, and we'll get you off and rolling, creating life-changing opportunities through homeownership. Thanks for watching. Hope you have a good day. Talk to you soon. Bye-bye.